Alright, I just wanted to take a second today to just go over a few recent trades and to explain the changing nature of this market right now and how I'm going to react to it and maybe how you should react to it as well. So the first trade I want to go over was TUP, a big runner that had a first red day, nice bounce. And I'm going to specifically talk about the first red day on 8-2 and on 8-3, the bounce day. So if we go into this chart, I'll show you what my trades were, how I handled them, and just what happened as a result. So on 8-2 here in the morning, I was short a little pre-market just because we were gapping down. It was the first red day. When we have a first red day, it's usually a trend change that could proceed to lower prices. And we ended up getting weak, but then coming all the way back, and I actually moved my stop to high of day. I got stopped out of my short, and I completely missed the re-entry. Now, that's something I really cannot do on such an A-plus trade because as we look at the rest of the day, we had a big fade. But just because I missed it, I kept my emotions in check. I didn't get angry. I didn't get upset. Shit happens. So I moved on and I said, what is the next opportunity on this play? And I actually got a great dip buy down here in the high 360s. And I sold it right into the push to 4. I mean, making a quick 20, almost 30 cents a share there. Pretty much saved my day. I mean, it would have been great to still have my short, but at least I was able to get some sort of gain out of this trade. And I've noticed that on these first red days on these massive runners, even though it's theoretically a short setup, you could also find these micro setups intraday, and one of them is a long setup. And the way I play this might sound weird. There's no statistics, no percentages, none of that. I just think if I was still short from up here and I was a normal short, where would I be covering? And really down to 360s, if we look at this daily chart, if we zoom in like this, that was best case scenario. I mean, from the breakout level at 375, there's a bunch of support in here. I definitely would have been covering at the 360s. I saw the tape the selling kind of dried up, so I just went for it and bought it. And you could take quick scalp opportunities there. Same thing happened on Yell, a big runner. And if I zoom in on the first red day here on the second, let me get in here. Okay, yeah, this is the red day here. This is the day prior. I was actually shorting this pre-market at 390-ish in here. And I actually covered right into this 340 crack pre-market. Made about 1,300 there. And I basically just left it alone. Same thing as TUP. It came up and I wanted to get in here and I just never did. I took a small short, covered it, never got back in, missed the entry, thought, oh, it might be down too much, but every time I think that on a big runner, it keeps fading. So I messed up royally on these first red days to the short side, but I did the same thing I did TUP. It came all the way down, and right here, when we had this crack below low of day, and it got bought right back up, I said, this is where the shorts are probably covering. So I bought it here with a 250 risk, spiked right up, and I took the single right into the 280s, which was a really, really nice, single, quick trade, good risk reward type of setup on a short, big picture short pattern, but it was a intraday micro long setup that I was able to find. Now, just because I messed up on the red days doesn't mean there isn't another opportunity. So after a red day on a big runner, I like to look for a bounce, and that's what happened on 8-3. So the bounce play, I play it by letting the chart consolidate a little bit in the morning, let it open, let it shake out, let it test its levels. And here, we had a nice spike, held the lows, spiked back up, still held those lows. And as we were building here, I was saying, okay, we start breaking high of day, and I'm going to try for a long. And that's exactly what happened. I got along 345. We started spiking up. I started selling immediately. Red green was about 367. and I was selling all out there at 390 for a nice quick trade. In this market, I like to take my singles on my long setups, my quick, easier money. Nothing is really easy, but it's easier taking the quick gains. Yes, I sold too soon and it went higher, but I'm fine with that. My risk reward was great, the pattern was great, and overall it ended up working for me. Now, TUP is still consolidating well up here, so it could potentially be a long in the coming days if volume sustains and it keeps holding higher highs, higher lows. Yell had the bankruptcy news and completely dropped. And I might as well explain what I did on the 7th here, so yesterday. And when we have such a big gap down on such a high volume name, I'm always looking for dip buys in the morning. And that's exactly what I did yesterday. It opened up, had a quick dip, came right back up. I was buying it, started spiking up, halting, and I sold it all above 260s. I just knew that was a quick single opportunity to take advantage of right there. Other than that, today, Tuesday the 8th, everything's relatively slow. And I really wanted to make this video because that keyword there, slow, I want to explain what I mean by that. So recently we've been in a strong market. Let me explain this using a daily chart of the S&P. So if you look at this daily chart and these moving averages, you could see for a while now we've been above this blue line, which is a 10-day, above this orange line, which is the 20-day, above the 50-day, which is the red line. And we've been on a nice trend since April, really hugging it, holding above. And we finally started right here to reverse. We're below the 10, below the 20, coming down. I'm going to potentially test the 50. If we can't reclaim the 10 and the 20 day and kind of cup and start pushing back higher, I'm going to be a little worried. Right now, I'm changing my market environment. I would just say my market environment idea from a strong market into a little weaker, moderate market, which is also going to make me decrease my risk a little bit per trade, especially to the long side. One other thing I want to note is, like I said, to the long side, it's going to make me safer, going to make me more cautious. MNK here was a great spiker, nice consolidation above the 10, above the 20, above the 50. I bought it yesterday. It ended up working, but it gave back all of its gains today. That's pretty weak. And I think the environment of the market's getting weaker. This swing trade's not working. Also, we see Apple here with, its biggest pull in a long time, really cracking all these moving averages, coming down on bad earnings. That's just not very healthy. Now, am I saying the market's dead? No, absolutely not. There's, of course, still plays. We still have spikers in this market and some opportunity. But if you don't understand the cyclical nature of the market and how to adapt, in times like this when we could be shifting, or it could just be a fake out and we get strong again, but if we could be shifting, I'm definitely going to reduce my risk, be a little safer, take smaller size, take my gains a little sooner as well, lock in those gains, and be patient waiting for those A+ opportunities. So the real moral of this whole video is to adjust your expectations, adjust your risk to the changing market environment. Clearly, there's a little bit of weakness. Will it sustain or will it just recover and get stronger? We don't know. But in a transitional time, which could be now I don't know for certain what's going to happen, but definitely is going to be something that makes me more cautious, makes me safer, makes me take on less risk because it's not worth it right now. Now, I'll update how I feel about this as the weeks go on in August. Maybe it changes, maybe it doesn't. Also, you have to know summer months, of course, August as well, are usually very slow. So right now, if you made gains this year, hold on to them, be safe, don't give your gains back, don't revenge trade, don't overtrade. Know your setups, know what's worked for you this year, and stick to them. No reason to be a hero, be safe, and just do what works for you. And that's it. And I will create an updated video about my thoughts of the market. But right now, changing my strong thesis to a more moderate / weakening and taking some risk off the table. And I hope you'll think about your own goals, your own process, your own risk, and take this into consideration, come up with your plan, and reevaluate where we are right now after such a big multi-month run. So definitely something to think about. And yeah, I'll update as days go on.